Take a deep breath, everybody. Take a deep breath. Woo-sigh. I know this economy has a whole lot of folks concerned. A lot of folks had previously accused my market updates of being too optimistic. And a lot of folks recently, in the past couple of days, have changed their tune and say, well, Ryan, looks like you were right. Well, listen, it wasn't about being right or wrong. It's about just understanding the fundamentals of the economy. And the fundamentals of the economy in October 2024 are not too much different than they are now. Yeah, we've had a period of turbulence, but when Liberation Day happened and the Chinese tariffs happened and other various tariffs happened, I made a prediction that it would take a few months, if that, to reverse course on the Chinese tariffs because it wasn't going to be sustainable. And of course, now we see a 90-day pause in the tariffs. And the UK trade deal, while it's good, it's pretty much low-hanging fruit. And again, it wasn't hard to foresee that coming. Why? Because if it's one thing we know about our president, Donald Trump, is he does not want to have a negative legacy. And he does not want to have the legacy of 6 or 7% plus treasury rates or a devalued dollar or a broken stock market. He will not allow that to be his legacy. So it's obviously talked to a few folks and understanding that individuals had to gain more confidence in the dollar, gain confidence in investing in U.S. treasuries. So he started acting accordingly. And so now we saw the recent rally. But this is the bigger point that I really want to talk about, is that we have to have a long-term perspective. When I was a stock trader, I would trade second to second, minute to minute, day to day, and every once in a while, and it took, some approval, we would have what we call back book trades, where we take proprietary positions and hold trades in what we call the back book. But then we had to get clearance. We had to talk about our strategy. And that's just for holding the trades for like a week, right? But that's not you, Main Street. Main Street, you don't trade day to day or week to week. You trade year to year, and God forbid you're blessed to live that long, decade to decade. And listen, we want to talk about this last 3 to 4 months, this turbulence. Look, the fundamentals, we still had 78% of the S&P 500 companies reported in quarter one beat earnings. So companies are still doing pretty well, okay? And that's the same economy we had in quarter four of last year, quarter three of the year before. They're doing pretty well. We'll say, well, Ryan, we haven't seen the effects of the tariffs yet, and everyone's waiting on the inflation report. Yeah, that's true. That's true. But, again, this is why we invest in good managers. Because, listen, Tim Cook, with his $50+ billion in cash on hand at the end of Q4, they're not worried about a 3 to 4 months of turbulence. And good managers will be able to look back at this blip and say, and move on forward and continue to invest well and run their businesses well. That's why you have to do research your companies that you invest in, diversify your portfolios, have a long-term perspective, and also understand exactly where you are on the scale of investing, right? Are you accumulation, conservation, or distribution? Are you 22 years old, 25 years old, and you might have a chance to buy cheaper on the next pullback? If you're, 43, 44 years old, conservation, you still got some risk that you can take. You're thinking more about retirement, but you still got some risks you can take. Or if you're distribution stage, are you ready to start taking out those RMDs, required minimum distributions? Where are you at on the scale? Stay focused. Stick to a plan. Again, year to year, decade to decade. That's how you should be investing. This last 3 to 4 months is just a blip. And I'm imagining now, moving forward, we're going to start seeing a whole lot more news that help individuals internationally feel more confident in the value of the dollar, the strength of the dollar, and feel more confident in investing in treasuries. And so we should see a little bit more stable moving forward. That's what I would think. And I could be wrong. I've been wrong before. Definitely been wrong before. But again, your plan says you look at the long-term perspective, regardless if I'm right or wrong. The short-term knee-jerk impulse reaction, we can't time the market, folks. Long-term perspective. Stay calm, focus, build a plan. Be the change. Peace.